All right, everybody, welcome to Nebraska Farm Bureau's news conference this morning. Just wanted to give everybody a chance to get in. I think we have most folks on. And so I'm just gonna go over a few quick things. We're gonna have Mark start off with the news conference. We'll walk through that report that we're releasing today. And then we'll take questions at the end. So if you have questions, you are more than welcome to either raise your hand and we'll get you to unmute it to ask your question. You can also pop it in the chat. And I'll be monitoring that and we can ask Mark those questions. And then if there's anything else, feel free to message me in the chat as well if you're experiencing any issues as we get this thing going. So with everybody that I'm expecting to be on, Mark, I'm going to go ahead and toss that over to you to get things going. Thank you.
Well, thank you, Cassie, and to welcome all those that are on this important conversation about input costs that our staff has put together. This virtual news conference is just a way to kind of get everybody up to speed. There's been just so many conversations over the last number of months relative to the ag sector, kind of where are the pinch points, and then you broaden that out to cattle conversations and trade conversations. And so we wanted to zero in just a little bit, talk about input costs in general. If I wanted to frame up the conversation, when farmers and ranchers sit down, we are businesses. We do cost analysis, we do balance sheets, and even myself, when I take a look at all the costs, just this year I ran it the other day and looked at the cost for my farm relative to the cost over the last couple of years, and it does just feel like those costs are going up, although I'm not farming any different ground or different crops. And so sure enough, when I look at the numbers for my own operation, it's very clear that the costs have gone up significantly. This report's going to detail in actually analysis form, numbers form, what some of those costs are and to the percentage. And that's the reason that farmers are concerned. And when I'm talking to them, whether it's at a meeting or just a casual conversation, maybe they give a call, and they're concerned financially, and they know that they can't do anything about sometimes what they receive for the commodities that they grow. But on the cost side, sometimes we can adjust that, sometimes we can't. So we thought it'd be beneficial to kind of take a deeper dive into that, because why does it matter to the general public in Nebraska? Well, the reason it matters is because as agriculture and profitability goes and sustainability goes in agriculture, as does our rural communities go. And so it's really important that our farmers and ranchers continue to be viable. There's profitability in there. And when that happens, everything from our school systems to the banks, to our implement dealers, to our co-ops, they all do better. And ultimately, that's what we want. And that's what we have to have long term for our rural communities to thrive and continue to be there and have the daycare and the employment and the schools. All this circles around profitability on the farm. And so one of the key profitability things on the farm is actually the cost of inputs. So at this point, I'm going to turn it over to Abigail Streff. She's our economist here at Nebraska Farm Bureau. She's done a lot of work in kind of putting some numbers together, and so anxious for her to visit with everybody and kind of tease this report out. So Abigail?
Thank you so much, Mark. I have some slides prepared to walk through the report a little bit more. So if we could get those pulled up. I wanted to start off with sentiment a little bit. So along the lines of what Mark was talking about, a good way to determine often how much producers and farmers are feeling what's happening in the field is sentiment. So one of my first slides, we'll talk about sentiment and overall how that's going. The University of Purdue does put that out. I will say sentiment surprisingly has gone up near the end of this month. So that's quite positive. That can come from good movement on the trade front. Good livestock prices, of course, impact that as well. But part of the reason why sentiment isn't as high as normally or as what we would hope or expect is just poor commodity prices, high input costs, and then of course inflation. So, anything on the slides there? Otherwise, I
Not
can
yet.
share mine too.
Give me a quick second here.
No worries.
It should be popping up here. Okay,
Thank you.
sorry about that.
Okay, next slide. I think you go slide 3. Yep, so this is going to be the Ag Economy Barometer. This is by Purdue University. So as you can see, we are higher than we were at the beginning of this month, a little bit all over the place, but still positive. Not necessarily extremely positive, but not necessarily pessimistic either, which is a positive. Of course, though, we always hope to see that barometer a little bit higher. Next slide, please. So one of the first things we talk about in the report is cost versus return. As you can see here, these are soybean and corn's cost and return. 2024 saw a huge drop in total gross value of production for both soybeans and corn. Soybeans dropped to around $535 per acre, and corn dropped to around $747 per acre. While 2025 and 2026 only have the forecasted total cost, those are expected to rise. Total gross value of production is not anticipated to meet those rises or the costs as well either. So we are looking at another year of costs being higher than production value. Next slide, please. Interest rates, of course, the Federal Reserve did decide to cut by another basis. So we are looking at a little bit lower interest rates moving forward. Of course, they're still not low. Last survey, they're around 7.29% for agricultural loans, so still pretty high. As you can see, this shows feeder livestock and farm machinery and equipment interest rates. Corn is around $8.47 per acre for 2025 for cost, and in 2026 it's projected around $7.44 per acre. So interest rates are going to be a pretty big impact on margins and cost sheets. Soybeans are seeing that increase as well, with 2025 looking at $4.57 and 2026 looking at $3.99. So they're projected to be higher in 2026. But not higher than 2025 was. So still high, but a little bit of a decline in 2026. Next slide, please. Farm equipment parts. Farm equipment sales have gone down. Since 2022, we're looking at more than a 50% decline according to the Nebraska tax expenditure report. So farm equipment prices have gone up, and because of input prices and where returns are, we're seeing a decline in equipment. But farm parts are also increasing in price. So it has become more expensive to fix your machinery. And in return, that's hurting margins. We have seen since 2020 to 2025 a 69% increase in farm parts. So a huge addition to margins and definitely tightening, of course, of that profit. Next slide, please. Fertilizer. Fertilizer is a quite popular conversation. As you can see, this shows the dollars per planted acre for fertilizer cost. Corn, of course, is much higher than soybeans, but that is trending quite far up. We're seeing a huge increase since 2020, and that is going to impact all commodities. Liquid anhydrous saw a 12% increase just from 2024 to 2025, and urea saw a 28% increase, according to DTN. So those are huge increases year over year. We're not talking about a 5% increase. 28% is going to be noticeable and definitely a cost producers are going to have to look closely at in the coming years. USDA, of course, as this graph shows, sees that increase. So from 2020 to 2025, is a 44.8% increase in corn per acre cost for fertilizer. Soybeans are higher than that at 61%. So those are huge costs that are going to have to be maintained and are actually looking at increasing in 2026 as well too. Next slide, please. So valuations and rent are next. Valuations, of course, are not directly a cost, but they do impact things like property taxes, insurance, rental rates, things like that. So when valuations increase, normally we see an increase in those costs. For cash rents on irrigated cropland, Cedar County, which is the highest in Nebraska at around $355 per acre, saw a 26% increase from 2020 to 2025. So that's a huge increase. People are feeling that. And pasture acreage also went up as well, and that's around $90.50 per acre in the highest county, which is Wayne. So that those valuations increasing, we will see are huge. As you can see, valuations are not always increasing. They're a little bit more volatile. Sometimes they're negative, sometimes they're positive. From 2024 to 2025, there was a 14% increase. So recently we've seen increases, and of course that will impact those rental rates this year as well. Next slide, please. Livestock inputs are a little bit more stable in milk. So we've seen milk kind of maintain a pretty stable total cost. Hogs went down from 2022 to 2024, but cow-calf production has gone up. So while the prices for cattle have gone up, so have the costs. But livestock looks a little bit different than crops, of course. Fuel, lube, and electricity costs have gone up 55% though for livestock inputs, so that is huge. Those costs, while may not always be directly associated, are still going to be impactful for our livestock producers. Next slide, please. So what does all of this have the impact of on our agricultural complex? So a good way to look at how this is really impacting fiscally our producers is looking at loan demand and repayment rates. So as you can see in the yellow, that's the loan repayment rates. In times when agriculture is doing well, those are much higher. But as of 2024 and 25, if you look at those numbers, we're seeing quite the decline in repayment rates. Not maybe at the point where we're seeing a lot of bankruptcies or there is a huge agricultural recession at the forefront, but it is still of note that those repayment rates have gone down. Demand for loans has also increased. This means capital loans, small loans, loans that help our operational loans that help producers stay in business have gone up. So interest rates have gone up, and with that, our loan demand has gone up as well, which of course, the more loans you take out at higher interest rates, the more costs are. So a good look at where we're sitting fiscally is that 2025 look with high loan demand, low repayment rates. So of course, not at the point where we are looking at a crisis, but definitely a good pointer of how significant the producers are feeling this. Thank you. That's all I have.
Right. Well, thank you, Abigail. Really some interesting information. And again, the reason that we put that out is just to get a better understanding of where agriculture is at. But we don't want to stop there. Nebraska Farm Bureau is about finding solutions for our farmers and ranchers, our members, and they want us to not just talk about it, but find ways to really, how do we help them through this particular time that we're in? I'm going to tease out just a couple different items that we are working on before we open it up for questions. First of all, we are here to grow markets for Nebraska agricultural products and our commodities. And we are doing that in a couple of different ways. We may not be able to talk about how do we reduce inputs that much, but one of the things we could do is increase the price that our producers receive for either a grain or a livestock. And so permanent year-round E15 is still a really significant conversation. I know that with the government potentially opening back up, we could hopefully have some more serious conversations about that topic. That would increase demand almost 2 billion bushels, which is really significant, almost immediately if we can get that done. We want to continue to work on growing the livestock sector. That does a couple things. It brings more income in for our rural communities. It stimulates growth through the building of livestock facilities. And then also the feed grains that they consume would continue to take some of the things that we do really well, which is raising corn and soybeans in Nebraska, that take some of that off the inventory. We also work significantly on sound fiscal policy. It's important that we continue to work on lowering property taxes. That is an input cost. We do get to deduct that from our taxes. That's how significantly we think that it is an input cost. This year is going to be a short session in the legislature, and we've got a number of things that we're working on. But fundamentally, we just really need to hold uh, the price that we're paying for property tax at a minimum steady, or just a very small increase. We need to draw the line there. We need to put a hard cap on that. So that's what we're going to be working on. And then on regulatory policy, one of the things that we've been talking a lot about healthcare in this government shutdown. One of the things that Nebraska Farm Bureau has is a health plan that we've developed in the last 2 years that you can be a part of. All you have to do is sign up to be a member, and you can be a part of this health plan that has lowered the cost of healthcare, uh, anywhere from 40 to 60% for producers, or really anybody. You don't have to be a farmer or rancher. Anybody that has a Farm Bureau membership, which you can just go online, log into nafb.org and sign up to be a member. And you can check out our health plan. It's been working very well. And then we've also been working at just lowering our interest rates. We've had conversations about trade as well. One of the things on trade that we talk a lot about is reducing barriers to trade. One of the barriers we have is actually a barrier in country, and that's where California Prop 12 wants to limit our ability to send pork into California. It's a very big market, so we want to get a fix for Proposition 12. And then also on trade, it's just really important to understand that we produce more in Nebraska than we consume. And there is a huge world out there that needs our products. And so this administration is working really hard on getting some more markets opened up. Matter of fact, I just hosted, Farm Bureau hosted, along with uh, our state ag directors, a group from the UK. One of the trade agreements that new agreements is with the UK. And part of that is that they buy a significant amount more ethanol. So we hosted them in Nebraska, showed them our ethanol plants, really had them get a good sense of just the vastness of our cornfields and really the incredible technology in our ethanol plants. I think it's very effective. Those are the type of things that we are a part of to ensure that when people are looking for grains and different things that we produce on our farms, that they come to Nebraska and they actually buy the products from Nebraska. That's really important. Those are conversations that our team and myself get to be a part of all the time. Well, with that being said, I think we are ready to open it up for questions. Any questions that you might have on the things that are presented today around inputs, the farm economy, all those are welcome.
Thanks, Mark. And just a reminder for anybody who has a question, if you want to raise your hand, I can certainly unmute you to talk. But you can also put it in the chat or the Q&A. We have one here, Mark, from Casey Mintz. And so the question is, the ag economy is looking a little better. Does that have anything to do with the trade deal with China?
Yeah, I'd say it would be. We know that our soybeans were certainly depressed because China was not buying a soybean. They had been buying at a pretty good clip, up to an average of 24 million metric tons a year, and as high as 30 some million metric tons. You go from there to zero, and that certainly has affected our markets. Now, in general, when I talk about China, we know that we don't want them to be the only country that we sell soybeans to. So broadening the countries that need our products, soybeans especially, is really important. But we can't go from a really high market to zero. That's very difficult. So the fact that the president has negotiated some terms with China to get some more soybeans in there, you certainly have seen a bounce in the soybean market, I think largely because of that.
And then Mark, just a follow up on that question, with this trade deal and maybe some of these other past ones announced, do you feel that that's a good barometer of the ag economy, or what's to come?
Yeah, I really do. I'm very bullish on the ag economy. I think we are doing things in such a more efficient way than we were even 10 years ago. So that's one of the ways that we can continue to lower our break even is just producing more with less fertilizer and more with less water and more with less energy. And we are doing that, and we're doing that very well. But at the end of the day, we still have to have a market to sell our products to. And so as we put all these trade agreements together, they are slowly trickling in. We had a conversation with USDA Deputy Vaden just last week, and he did say that sales are starting to trickle in. And so I think that will continue to increase. You put that together with our China conversation, and I do think we will see some movement in our commodity prices here over the next 6 months.
Again, just a quick reminder, feel free to raise your hand and we'll get you unmuted to talk. Or you can use the chat feature. Mark, this question's coming in. How serious is the current financial strain compared to previous years or compared to past farm crises?
Yeah, that's a good question. I think when you just look at my judge of the conversation is really, I think bankers are the ones that get to see this firsthand. And when I visit with the bankers around Nebraska and really around the country when I'm traveling, one of the first things I ask them is just how are things going? And it's not uncommon over the last I'd say 4 months when I would ask them that question, they would just kind of go, it's pretty tough out there. Um, we're going to have to do some creative things to probably get some loans reestablished, and they're not confident that everybody's going to be able to make that. And so that for me is the barometer, and we'll see how that goes. Hopefully, this little tail that we've had this last month on commodity prices going up will make a difference. Cattle market's still pretty strong. So those are the things that are going on. But right now, what I'm hearing in the banking sector, it's not all roses out there.
Right, Mark, I've got another one here for you. Is it fair to say that commodity prices have not kept up with farm costs like equipment and maintenance?
Yeah, I think that's absolutely true. I think I might kick this over to Abigail to talk about that. But just the ratio of the price of inputs versus the price of commodities, we have seen greater efficiencies, which has helped that spread a little bit. But right now, with the price of inputs, we certainly have not seen the commodity market go up. We've actually seen it go down, and so that's really put the squeeze on. But Abigail, any thoughts there?
Yeah, no, I completely agree with what Mark said. A lot of it is that input costs have continued to rise and prices have really not followed suit on the crop sector. So we're looking at a gap right now between costs and value. So a lot of that comes down to prices are just not matching what it costs right now. So when costs rise and prices don't, that gap gets a little bit bigger.
It's not unlike our budgets in our household. If the price of food goes up, gas, electricity, rent, and then if you don't get paid anymore, it's pretty tough on the budget. And so then you have to look at creative things, and that's what we're trying to do for our members. Or what are the things that we can do? Again, may not be able to lower cost, but if we can increase what we get paid, that works also.
Okay, thanks, Mark. This other one is kind of a follow-up, relates to fertilizer costs, equipment costs, some of those input costs. Are these more of a supply chain issue factor, or is it primarily inflation driven?
Yeah, I think that's one of the things that we are trying to decide. And so, one of the things that we've asked from our federal government is to look at, are there things within the major things that we purchase? So maybe it's machinery, seed corn, fertilizer. Is there any manipulation on those prices? I don't know. I don't have any basis to put that on, but are there things that are going on that for some reason prices are going up with inflation, but yet not coming back down as supply chains have really recuperated. We saw certainly a significant price run up during COVID, but a lot of those things have not really come back down significantly, not to the extent that they went up. So why is that? There are people looking into that, especially on the fertilizer side, maybe on the machinery side, just to make sure that there isn't anything nefarious going on. Again, I don't have anything to base that on, but we want to make sure that that's not happening as well, and that's not on the table. Abigail, anything on that?
I don't really have anything to add. Of course, with trade and all of that, fertilizers impacted quite heavily. We've seen some trade deals though, or tariffs, fertilizer be exempt from tariffs and things like that. So that of course helps. But trade is a pretty big impact on fertilizer, especially because we ship most of that in.
Any other
Um,
questions?
Questions here, yes, we've got one more here, Mark. Um, there are lots of interesting data points included in this report. Did any numbers or margins included in this report come as a surprise?
I will let maybe Abigail tackle that one first.
I think we definitely have seen inputs. I definitely knew that they were going to be increasing. We've heard from a lot of producers that have been talking about, man, like my inputs keep increasing. So I think that was something that I had anticipated. By how much some of them had increased year over year was definitely a surprise, I think, at some different points. Equipment, part costs, those things increase, but the percentage that they've increased definitely I think was surprising. So I think another surprise was how resilient still producers are. I mean, sentiment is still pretty high. We are still seeing producers, maybe they just will, hold off a year or two on improving this or upgrading this. So I think producers have been incredibly resilient through these costs, and I think that that shows great determination to pull through. Like I said, I don't think we're at a farm crisis by any means, but those costs are high, and I think producers feel that, but I think there's still determination to push through those. So definitely surprised at how well sentiment has upheld, but those costs, there's definitely some surprise in how much they've increased.
Yeah, I would agree with Abigail. What I hear when I kind of travel around, it's like they'll come up with me when just some random thing go, I cannot believe how much it costs to go get this particular part or to my repair bill. Especially like you send a tractor in for anything, and if it doesn't cost you $10,000, I mean, you wonder if they even looked at it. And so some of those types of things are just you feel it, but then to get it quantified that I'm not going crazy, my bills are higher, and Abigail has kind of demonstrated that through this report.
Okay, thanks, Mark. We've got a couple more questions here, and I would just say, if you have any other questions, get them into the chat. We'll get them answered here. But two more I've got on tap here for you, Mark, right now. How do these economic challenges ripple out to rural communities or non-farm Nebraskans?
Yeah, like I said earlier in the conversation, we need to make sure that things like equipment dealers stay in our communities, that schools are viable, that we have things like daycare, we have housing that is at an affordable level for our communities. Those are all the things that if agriculture doesn't continue to be profitable, we can't pay our employees the wage that they need because their costs are going up too. Their cost for food is certainly going up. Their insurance is going up. All these things are going up. So the people that work in the ag sector, along with the farming families, we're feeling the things that just the everyday consumer is feeling. And so we need to make sure that all the sectors that work within agriculture, that we have the ability to increase their pay by whatever, 2, 3, 4% a year and not hold them steady because we just don't have the funds to do it. And so that's how it kind of ripples down to our communities. Because when you look at our small communities, a good part of our small communities is dependent on the ag sector, but it may not be working for a farmer, but it may be working for a co-op, maybe working in a packing plant, all these types of things that support the direct farming sector.
All right, and then finally, with this being a difficult year for producers, what is your encouragement for them?
You know, my encouragement to them is do the things that you need to, that you can control. And, you know, when you sit back and at the end of the day, when you look at the things that you've been worried about, thinking about, if a lot of those things are outside of your control, see if you can shift your mind to the things that you can do. Do the very best at taking care of the livestock. Do the things now that the harvest is about done. Make sure that grain is in the bin and it's in good condition. Make sure that you are working with a marketer to ensure that you can get the very best price for that crop. When you're talking to your banker, make sure you're not hiding anything. Make sure everything is out on the table and you really understand where you're at financially. It may not be where you want to be, but just knowing where you're at does bring a lot of comfort. Those are the things in my life that I've recognized, and those are the things you can control. And then really sit down and think about the next game plan. Maybe look at the next couple of years. Sometimes we can get very short focused and not get past to maybe the longer term plan. I think it's important to sit down, look at a 2, 3, 5 year plan, and is there a pathway to maybe get beyond that? And certainly at least on the things that you can control, and then be reasonable about the numbers that you input for what you think we could long term get for our commodity prices. And so, and again, sometimes it's hard to be positive in these times, but we have a choice, and you can either look at it really negatively, or you can just continue to think about the next year. And that's what we do really well in agriculture, and I'd encourage people to do that.
All right, thank you, Mark. That's it. That's all we have for questions.
All right. Well, thanks everybody for being on. Thank you for jumping on. Thank you for the media. If there's any follow-up questions that you need, certainly you know how to contact us, and we will get any follow-up questions answered. It's going to be an interesting week as we go forward, and we'll be watching along with everybody else how this all unfolds. Thank you for being on this webinar about input costs and the report we had.